previously on Stay in Your Lane.
I won't name, but it's not a niche product for ABC shipper. It's Fortune 100 and Fortune 500 shippers that are getting these shippers only or shippers interest policies. So
that's what it's called, the shippers interest.
Shippers interest, okay. Exactly.
Well, I think you had a couple things happen since COVID. We saw the value of goods go up, which meant insurance values needed to come up, or you had a gap. So many people were flirting with that just under $75,000 or $100,000 limits, and those shipments are now much more because inflation and cost of goods and raw materials. So you're seeing a lot of the products that were before no problem under 100, they're now over. So now you don't want 200, but you need to be able to cover it for the spike.
Right. We had a situation this week or last week. One of our agents was presented with an opportunity from a major electronics shipper, 37 loads a day, $1 million on each load. So we are working to secure insurance in that situation. So that's kind of an extreme example. Typically, the load that may have had a cargo value of $70,000 or $80,000 pre-pandemic is still probably under that $100,000. But certainly certain types of sporting goods, electronics, certain types of food, liquor, things like that,
proteins,
cigarettes,
powders,
proteins, yes,
enzymes,
all of that. And the great thing is there's hardly any exemptions either on the user-based cargo or the Mexican cargo insurance. So that's a question we get a lot is, well, I'm sure it exists, but how many hundreds of products are not really covered? And typically the only product not covered is marijuana. So
okay,
Thom, this is a lot of good information. What are your thoughts for the rest of the conference?
Well, I'm looking forward to just chatting with people. Maybe I probably failed to mention this. The first time I came, I spoke 2 years in a row on freight and the economy, and have kind of made a little bit of my career, as Joe knows, trying to understand capacity. And I've been pretty bearish now since December of 2021, but at our firm, the executive team, we're starting to feel a little bit better. It's not so much that a flip will switch, because the last couple of times where it felt like a flip switched, we also had regulatory issues that tightened up capacity, whether it be ELDs or hours of service changes. Hurricanes. We had a tax cut in the second half of 2003. We had a tax cut passed at the end of 17 that impacted 18. We don't see those things on the horizon, but we do see that there are a lot more motor carrier failures than the market is able to see. So, for example, I know an earlier guest was Eric Starks. I believe that their firm showed that in 2021, 106,000 motor carriers came in, representing about 169,000 trucks, so about 1.6 trucks apiece. Well, that's where the explosion was. This more than any other cycle that any of us have ever seen, the micro fleets that came in. And a lot of that is because the continued success of freight brokers who become integral to the food shipper supply chains, and well, not just food shippers, but shipper supply chains. And so we've also seen, I have to be careful of the numbers that we've seen, but our failure rate, which is what we call a midterm cancellation. So it's not a cancellation because of a late payment. A lot of those get trued up, and it ultimately would be a total non-payment or compliance where they don't have cameras. Some of the underwriters require cameras. We've seen a 700 to 800% spike in midterm cancellations where folks have gone out of business. Normally, and I have to be careful how I share the numbers, but in normal times, there's always 4 or 5% of the motor carriers that fail, especially at the small end of the market, as you may imagine. So we've seen a 7 to 8-fold increase in that. Now, we continued to grow last year. We picked up new customers, and our customers were typically a little bit larger. So that number can sometimes be used against us. But just as speaking about the marketplace, the reason I share that with everyone here is I believe that the carnage at the low end of the market is much greater than people realize. And that's important because everybody keeps waiting on these bankruptcies to spike. But, that someone with 3 trucks, 1 truck, even 20, 30 trucks, a lot of times they just cease operating. And we feel that we have a pulse for that end of the market that is different than traditional sources. Well, one of the things I was sharing with you, Joe, is that we get some proprietary data that only a couple of other sources get. It's a census run on FMCS data, and we've got data on a monthly basis going back to about 2010. And since the May 2022 peak, which happened to be the peak for both drivers and the number of fleets, we've seen about 699,000 drivers exit the industry. Now, this is for hire fleets that are licensed and have active insurance. There's a lot of ways that folks try to slice and dice the FMCSA numbers. And so, for example, the ATA, when they come out with their booklet every fall, their numbers are too high because a lot of those motor carriers don't have insurance. They're just an MC number that was out there. So these are insured, and that's a huge number. So it's gone from about 3.7 million to barely 3 million drivers right now. Pre-pandemic, it was 2.95. So we're within 50,000 drivers of the pre-pandemic driver level in January of 2020. That's significant because the U.S. economy is about 13 or 14% bigger than it was pre-pandemic. So we think that the inflection point where it's going to feel like we're at an equilibrium will be around May or June. We've also seen about 55,000 fleets stop operating. I don't think that number's as important as the drivers, simply because, ultimately, it's just like the old line about trucks. I can get a truck all day long. It's all about drivers. So it doesn't really matter how many fleets. It's the drivers that have exited the business. And we've seen that from a couple of other ways. Endorsements, which is an insurance term for the adding of tractors, trailers, and there's positive endorsements every month, negative, and then we net that out. Well, in a typical month, endorsements represent 13 to 15% of our monthly premiums. Well, in recent months, they're about 3%. So they're still positive, although we've had 2 negative months where the net of positive and negative has actually been negative. But I think it's noteworthy that it's 2 to 3% a month, and it had been 13 to 15%. That means we've seen over an 80% drop in endorsements. And so that speaks to the fact that a lot of folks are parking equipment.
Well, and you brought up that, pre-pandemic 2020 levels.
Yep.
What's the impact on the inflation in the economy, and how much of that's fed by our government spending?
In terms of the impact on insurance rates, or
as far as the impact on capacity, and when you look at total pictures versus total pictures, you say what's different from 2020 to now?
Yeah.
Inflation,
right,
and government spending.
Well, that the economy being 13 or so percent larger, that's inflation adjusted. So if you include inflation, it's quite a bit bigger than that. But so that's a real number, not a nominal number.
So core inflation, where everything's stripped out, or just everything's
adjusted
real?
For inflation. So the nominal economy is over 20%. It's actually close to 25% larger than it was in 2019. So in 2019, nominal GDP was pushing 20 trillion. Well, I've kind of got my numbers off a little bit, but these are adjusted for inflation. That's the thing. So that would suggest then that we need more drivers, is my whole point.
And more trucks.
Than what we had pre-pandemic. Now you can get into freight mix issues and, what's on the trains versus the highways. So maybe that number is a little oversimplistic, but I'm optimistic that we're going to be sensing by mid-year we're close to equilibrium, right? I mean, January, February were difficult. January kind of gave a head fake that had some motor carriers and industry analysts thinking, oh, we're about ready to move. And then February was generally disappointing across the board. And to me, that's normal. I never try to read anything into January or February. March is the true first month where you might be able to get an indication that this is going to be an okay year, a disappointing year, or a surging year.
Most of the time, election years are pretty flat.
It depends on. There's a lot of government spending, out there. Programs that have been passed. The dollars haven't been fully allocated. So I think this is going to be one of those years where government spending is pretty high.
Yeah, I would agree with you. I would agree with you very much. Wow. You definitely got the insurance game together.
Well, it's been a lot of fun. I love this industry. It was another way for me to stay connected after Celadon. And a lot of folks hustle every day. The drivers, the CSRs, the load planners, they're sort of the backbone of the industry.
Favorite thing about the conference?
The networking. But unlike a lot of conferences, I actually go to a lot of the presenters because the content's good.
Oh, absolutely. I thought for sure you were going to say Joe.
Well, and Joe. How's that?
Okay, thank you.
Very good. Well, Thom, we appreciate it. You do a nice job. It's obvious. You're passionate about it. And we're happy to have you here at the conference.
Well, thank you for having me. And on behalf of Reliance Partners, here's to a better year for everyone. Maybe this will be the year where it's in like a lamb and we'll be out like a lion. In other words, kind of weak and soft in the beginning and strong and more powerful later on.
Very good. Until then, stay in your lane.
Absolutely.